Coming up on Market to Market, tariffs return to the campaign trail and are being aimed at an agricultural giant. Rural health care options become more scarce, and commodity market analysis with Dan Huber next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, September 27 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The exact impact of the Fed's interest rate cut last week is still working its way through the economy. Sales of new homes were lower in August by 4.7%. Analysts expect the 50-point basis cut to increase support for new construction. Orders for durable goods were flat last month, a win for those saying there will be a sharp decline in the purchase of items meant to last at least 3 years. The rise of inflation in the government's preferred measure, the PCE, came in at 0.1%. The year-over-year inflation rate moved higher by 2.2%. Scholars, economists, and politicians have debated the effectiveness of tariffs for decades. The impact of the tariffs in the Trump administration is still under review. The former president vowed to go even further with U.S. companies taking production from onshore to off if he were elected again. Peter Tubbs reports.
Former President Trump has threatened to use one of the trade tools he is famous for invoking to shape the farm economy. In a campaign stop in Pennsylvania, Trump promised to place tariffs on John Deere products made in Mexico.
I love the company, but as you know, they've announced a few days ago that they're going to move a lot of their manufacturing business to Mexico. I'm just notifying John Deere right now, if you do that, we're putting a 200% tariff on everything that you want to sell into the United States, so that if I win, John Deere is going to be paying a 200%. They haven't started it yet. Maybe they haven't even made the final decision yet, but I think they have. John Deere is going to, and anybody else that does this, because it's hurting our farmers, it's hurting our manufacturing. And if you do that, you're going to have a 200% tariff put on the product that you make in Mexico, right across the border.
Economists agree that the cost of tariffs are paid by both the companies that are importing the goods and the customers who make the final purchases of those products. In June, John Deere announced it would be moving some production of skid steer loaders to a plant in Mexico by 2026. The Trump administration levied a series of tariffs on Chinese products in 2018. China then reduced its purchases of American agricultural commodities, causing the U.S. price of soybeans to plummet. China did eventually sign the Phase 1 trade agreement, which guaranteed the purchase of nearly $40 billion worth of U.S. agricultural commodities. While Chinese purchases have exceeded pre-tariff numbers, they have yet to achieve the levels in the agreement. For Market to Market, I'm Peter Tubbs.
According to Kaiser Family Foundation research, about half of U.S. adults say it is difficult to afford the cost of health care. A study on Iowa's overall health care landscape reveals challenges for providers and citizens. Rural areas in the state face some similar and unique challenges. Dr. Chelsea Lensing is an economics professor at Coe College in Iowa and spent her summer researching the number of health care options in the state for the Common Sense Institute. Here is part of our conversation from a recent episode of the MTOM podcast. This is our cover story.
And there definitely are some real challenges at the absolute level, but then when you look more broadly at what Iowa is doing in comparison to the rest of the country, we're actually doing pretty well. So what we found at kind of a big picture level was that there's a lot of challenges that Iowa is facing, but we're holding up pretty well in comparison to kind of what everyone is facing in the country.
So we're not unique, but there are challenges, and I'm going to guess the challenges are there's not enough access to care for everyone, and maybe urban areas are more opportunities than rural areas. Does that hold up?
Yes, yeah, absolutely. One whole section of the report that we looked at was the differences between urban and rural communities. And there's a whole bunch of ways that you can measure access to care. So there were 3 primary ones that we had looked at. We looked at primary care physician rates, we looked at facility opening and closures, and then we looked at more of an intensive margin of supply when you think of hospital beds and department closures. So that first one, the primary care physician rate, so that's adjusting for the number of primary care physicians for the number of people, right? We would expect there to be more primary care physicians in the more populated areas because there's more people, but even once we adjust on a per capita basis, we see that there's significantly more providers in these urban areas. So if you split all of the counties in Iowa into urban and rural, which the USDA has definitions of what constitutes urban and rural, 77 of our counties are considered to be rural. And if you look at trends in the number of primary care providers between these two types of counties, over the last 10 years, for urban counties, we've seen about a 1% decrease in primary care physician rate. But for the rural counties, we've seen about an 8% decrease in primary care providers. Again, this is already adjusted on a population basis. So we're seeing a much larger decrease in the rural counties. But even further than that, counties are not just urban or rural. Even within the rural counties, we have 22 of those 77 counties have 100% of the population living in a rural area. So if you take those more extremely rural counties and you compare them to the counties that have, say, fewer than 20% of the population living in a rural county, there's about double the amount of primary care providers in those urban counties than what we see in the more extreme rural counties. So there's a really big divergence when we are looking at primary care physicians as a measure of access to healthcare. The higher percent of individuals you have that live in a rural area in a county, the lower the options are for care.
Yeah. Is there a theme in Iowa about mental health care, rural versus urban, or does it even matter? We just have issues.
Yeah, so the 2 ways that we were looking primarily at mental health access in Iowa is through the number of facilities and then through the number of providers. And so I'll start with facilities, and we looked at facilities that were overseen by the Iowa Department of Health and Human Services. So it doesn't include all facilities, but it includes a lot of mental health care facilities such as community mental health, more like long-term or rehabilitation mental health, and those types of facilities. We've seen a significant increase in the number of closures and hardly any openings over the last 10 years. And so these dedicated mental health centers are closing at a concerning rate. And so that's one area in which we see a big decrease in supply for mental health. But at the same time, we're seeing an increase in the total number of mental health care providers on a per capita rate. So, for example, even in rural counties, over the last 10 or so years since 2015, the number of mental health care providers per capita has doubled. And so even though it's still only about half of what we see in the urban counties, there's still a big gap between urban and rural counties, we're making a lot of progress. But again, it kind of stands in the face of all of these closures of these specific mental health care facilities. And so it really depends on the type of mental health care that individuals are seeking and where exactly those centers are.
Any economics tied to mental health and what that does to an economy? Do we know anything in those fields?
Yeah, and there's a lot of evidence from an economic perspective to that ties together when we're having an economic downturn. So when we're having higher unemployment, things like that, we tend to see higher rates of deaths of despair, which are also related to mental health of individuals. Deaths of despair can include things like suicide, but also excess alcohol consumption, opioid or other drug consumption. Premature death rates was something we did identify in the rural section, the rural focus of the paper, because not only are we seeing an increase in premature death across the state, it's substantially higher for our rural communities. So the absolute rates are higher and the increase is higher for these rural counties. And so even though if you're just looking at measuring our economy with the unemployment rate, that might not be telling the whole story, right? And something else is going on here with our rates of premature death. And again, we don't have the data to parse out how much of that is due to mental health, but I think it's all extremely related, right? How individuals are feeling, how they're dealing with the economy, how they're dealing with family life.
The full MTOM is available now.
Next, the Market to Market Report.
End of quarter positions and an approaching USDA report seem to be upstaged by drier conditions in Brazil. For the week, the nearby wheat contract added 12 cents and the December corn contract expanded 16 cents. The soybean complex fed on the stimulus news from China while also benefiting from a soybean oil rally. The November soybean contract gained 54 cents while December meal jumped $24.90 per ton. December cotton shrank 79 cents per hundredweight. Over in the dairy parlor, October Class 3 milk futures declined 80 cents. The livestock market was mixed. December cattle strengthened $1.28. November feeders put on $3.92. And the December lean hog contract fell by 85 cents. In the currency markets, the U.S. dollar index lost 32 ticks. November crude oil sold off $2.91 per barrel. COMEX gold improved $23.30 per ounce. And the Goldman Sachs Commodity Index increased more than a point to settle at 533.25. Joining us now is one of our regular market analysts, Dan Huber. Hi, Dan.
Hi there. Good to be here.
This wheat market had a nice little bump in September,
right.
But the month is coming to the end. The quarter is coming to an end. Mm-hmm. Is that really the big factor in the market right now?
Well, certainly it helped some of the short covering in all of the markets. I mean, wheat, corn, soybeans, all three. I think wheat, of course, doesn't have a big harvest story to talk about as we do in the corn and beans here at this point in time. So a little bit more of a follower than a leader, I think, at this point in time, which to a certain extent is unfortunate for corn especially because corn's really not going to go anywhere unless wheat really kind of starts picking up the ball and running with it. So it's, but again, with wheat, we just don't have enough of a story to excite it right now.
Watching the last 3 out of 4 months, it's pretty even.
Absolutely.
On the trend. What do you see breaking it out?
Well, and again, that's normally a typical pattern when markets are at a bottom. We're trying to find value. We're definitely a transition area. Maybe definitely is a strong word, but it seems to be in a transition area. It could be something in the southern hemisphere. We're really not just getting going with the soybean planting in southern hemisphere, but we've got wheat conditions to look at. Same thing over in Australia. I think Australia has been pretty respectable weather here so far, but they just seem to go back forth from feast to famine. So any of those things could really power it up. Russia, Ukraine are always going to be major influences on what we have. Russia, especially when it comes to the wheat market, and we'll see what the winter holds in store for them. So.
In corn, 416 seemed to be that strong resistance point.
Right.
We closed above that today. What does that mean?
I think longer term, it probably says we are transitioning away from a bear market, at least into a sideways market. I don't think it necessarily means that we're going to scream out of here at this point in time, but I think it provides further credence to those of us who think we have a major low in the markets at this point in time. Now we're just going to have to start developing a reason that we can come out of these ranges, which might take a little while.
This harvest low is very early, if that's in.
If it's in,
right?
correct,
It would be extremely
early
low.
September. Yes, it is. Although we truly have not moved very significantly away from that point at this time, and I wouldn't be surprised if we'll bounce around. We'll try to, maybe we won't test the extreme low again, but we might come back, half to 3/4 of what we've just rallied, sometime here over the next 30 days. But I think it's unlikely that we'll probably go all the way down, test it, or take it out. But I think when you look at the markets as a whole, we've been lower for 2 years, and in any bear market, I mean that's really about as long as you can extend them down. So not that surprising to see maybe an early seasonal low after a situation like that. So,
any credence to the thought that maybe this harvest isn't as strong as what once was thought, maybe even as little as 6 weeks ago?
Again, I guess I'm not haven't walked enough fields to put a lot of credence to it. The folks I've spoken with so far that have done corn have been very pleased with the corn. Not only for
You're not supposed to say that out loud.
Well, I guess I was going to add into that. Soybeans maybe not so much. Not that the yields have been bad by any stretch of the imagination, but boy, that dry August, I think throughout most of the Midwest, when you really need to be filling out those soybeans, just wasn't there. So in fact, the fellow I spoke with the day before yesterday said a lot of beans, a lot of little beans. So the test weight's there, but boy, it's just not what you're going to look for gangbuster type yields.
So maybe more in beans is on the size of the harvest, not it's dry in Brazil and it might rain at some point, or China came to buy. Are any of those three stories more dominant than another?
I think I would probably weight the South American issues as the dominant one. They are not really getting moving on planting and soybeans. They're definitely behind a year ago at this point. Probably counterbalancing there is that Argentina is probably going to go a little stronger on beans this year on corn, but they're not looking at the greatest conditions either. So I think that rises to the top. The other two are supportive factors. Certainly that move in the bean oil this week really kind of get the ball rolling. Now that fizzled out Thursday, Friday, but meals turned around, picked up the slack today. So.
Well, I've asked you this question, I think, twice. Let's do it a third time, but
Okay.
I'm going to give you a different answer on this one. This is Gary in Wisconsin wants to know, Dan, what is the larger factor in the shorts getting out of the beans? Is it the China stimulus that just passed or South American weather?
I'll tend to shift a little bit higher to the China or the South American weather.
Okay.
And again, seasonality. This is the time of the year where we know we're in the next 30 days we have got our heaviest supply of beans for the next year, and so that's already factored into the market. So why stay short at this point in time?
When you hear a story about tariffs and you hear an election's coming,
Sure.
and you hear China's economy is soft, where does China factor in right now, Dan, on the commodities? And is there one in particular that we need to be sensitive to about our relationship with China?
China's always going to be important, particularly when the bean market. Corn's certainly a much less of an input there. Mexico's probably going to be a bigger question mark on that one with some of the talk we've heard. China we're going to use us as the supplier of last resort. No two ways about it. Granted, if things really turn sour in Brazil, they'll step up their purchases here. But gosh, when you look at the numbers over the last year, they have really shifted away from us, done a great job. Now, granted, they've had the available supply out of South America. There's no guarantee that will necessarily be there as large moving forward. But they're going to be the dominant player of the bean market. But we get a smaller and smaller percentage of that share each year. So it's granted that's probably only going to drop so far, but. They've had their own issues, not only economics, but of course in the hog industry over there. That's probably stabilized a little bit. They might see their numbers stabilize and grow, but boy, they've had less demand for soybean meal, in total. So
this is hopefully a quick question. In beans right now, November closed at getting that in the light, Paul. 1066.
Okay.
Is that something that you're selling right now?
I think, and I was kind of shooting for beans to get to 1070,
Okay.
which they pretty much did today. So yes.
And that corn at 418. Are you selling some of that right now?
418 to 425 certainly. I think you take a little piece of that. I think over time you're going to see better levels down the road. But if you need to move some product out of the field, those are good numbers to work at.
Because I think we've sat here in certain recent weeks past going, if we could just get a quarter or a dime. Here we got 50 cents.
Right.
And we're thinking, let's hold a little bit more.
Yeah.
All right, let's go to cotton, if we shall. This is a market that had gone higher and higher, and then middle of the week to the end of the week came. China or an export story, or is it a little hurricane?
Well, the hurricane certainly is added into it. They know it's going to disrupt some of the harvest as we move forward here. Not that China couldn't fit into that picture too, but no, I mean, I think the advance we saw was long overdue. Really, a few weeks ago, that market had tried to start turning out. It was acting like it wanted to come out of the base. That the stimulus of the weather probably helped that task on just a little bit here. Here again, too, I don't think we're going to get carried away. We probably milked about all we can out of this first move up here. But I think cotton, along with most of the other commodities, seems to be in a transition phase. We've moved from a 2-year-long bear market, pretty dramatic bear market in cotton, and now we're transitioning to a stable to, I think, higher prices as we move into the months ahead.
I think you said you used the word hurrah in one of your newsletters this week for live cattle. Is the last hurrah here for live cattle?
That was I think a relatively impressive rebound we saw this week. But yes, I don't see where we really continue to push the cattle up here. I think there's too many competing meats out there. Granted, the pork has done a pretty good job of coming out of its depths of depression here a few months ago. But even there, I think that one's probably exhausted itself for the time being, maybe needs a little bit of pullback, but I think it's just to think we can continue to push cattle up in the new highs once again, I think is a tall order.
Only one person gets the top. You can't see the top, or you can't pick the top, but can you see it from here is what I'm hearing you say?
I think we probably look backwards and see it, but it's close enough that not time to be greedy about what we have in front of us.
In the feeder cattle market then? Mm-hmm. Where's the top in that one?
A similar situation in the feeder cattle market. It's had a nice rebound overall over the last 2 to 3 weeks. Particularly if we're going to see the grain markets, corn market in particular, start to look a little livelier to the upside. I think that's going to deter some demand in that feeder market. So yeah, I think we're probably exhausting that one as well.
So possibly part of the most recent rally was because of the lower corn and fueling it a little bit?
Well, certainly the lower corn or the stagnant corn probably helped stimulate it again, thinking that, maybe we're going to try to feed a little bit more than what people thought maybe even a week or 3 or 4 weeks ago. But yeah, I think that if we start seeing corn generally stabilize here, it's going to be pretty difficult to sustain any strength in feeders.
Live cattle seem to have this tie to the economy in general. Mm-hmm. Feeder cattle, a little more tied to the weather and the conditions. It's plenty dry in cattle area and continuing to get dry. Is there any factor in that in either cattle or feeders that we're watching too?
I guess it would be silly to say that there isn't some kind of an impact there, but isn't a major one at this point in time. Moving into the winter months, I don't think that's probably as big as normal years.
Hogs and the hogs had a report this week. What did you see from that?
Neutral report. I mean, pretty much everything was right on top of expectations. Herds are very stable here at this point. Don't seem to be generating much growth or contraction either one. So the hogs, big thing we need in hogs is additional demand here at this point.
Where does that come from?
Well, and again, there's where China could come into play. I mean, they do continue to import a little bit of pork from us, but it's, the demand's probably going to have to be generated at the retail counter. And if you look at dollars and cents wise, boy, it's pretty tough to beat the value of pork here compared to a lot of other meats at this point in time.
Crude oil has some value for some, frustrating for others. OPEC said, you know what? We think we are going to do some production changes.
Start boosting. Yeah, and again, it's always been an age-old story. They come up with their quotas. We're going to cut back in production. There's always on the fringe somebody cheating on that. And it really looks like the Saudis have decided, we're giving up too much market share to other members. We're going to go ahead and start boosting production here at the end of December. We're at the lowest levels we've seen in crude oil since the mid-20s. Probably a bigger concern or risk for them is that economy in China going to stabilize, or is it going to continue to deteriorate, because they are the major player on world crude imports at this point in time. So we'll see if that really takes us down to the bottom. But I mean, at a minimum, it should say we're not looking at outlandish fuel prices as we move over the next 3 to 6 months. So.
All right. Dan Huber, good to see you.
Good to see you. Thank you.
Thank you so much for the time, Dan Huber. And we're going to pause this analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. The Harvest 24 images are great to see on Instagram. We've posted some of our own and love to see the tags that you've given to at Market to Market Show. Give our account a follow as well if you're out there scrolling. Next week, we'll give extra attention to a large government report landing in the middle of harvest. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.